Tyler, there's a lot of big stocks that are up this year. We know NVIDIA stock is up over 200%. I did a video with Jeff Santoro recently talking about how much it's up. Tesla is another one that's up a lot so far this year. It's up almost double. There's a couple other stocks that you and I are following closely that we're actually putting on our buy list for 2024. While Tesla is not a stock I think either one of us are buying next year. You ready to talk about a couple stocks that are up a ton? We still like them as buys.
I always like to see companies that are doing well, but are still trading for really cheap. And I think that's where we're going right now.
Yeah, it absolutely is. I'm Jason Hall. This is Investing Unscripted, joined by Tyler Crow. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, check out our special link. Go to fool.com/unscripted. The Motley Fool is going to give you its 10 best stocks to buy right now. You're going to want to check that out after watching this video. Okay, Tyler, let's start with a little bit about Tesla. So we go back to the beginning of the year. The stock was down a ton. It had been cutting prices. There were a lot of concerns about competition, a lot of concerns about its profits really getting hit hard as more companies were fighting to take their share of that EV pie. As we look at today, the stock's gone up partly because things didn't exactly go as expected. Yeah, they cut prices. Yeah, profits were hit. Tesla's still super profitable and they're still growing. The thing though, and this is for me, the reason why it's not on my buy list is as much as we've seen General Motors and Ford and some of the big automakers scaling back a little bit on their aggressive EV expansion plans. And we've seen the Rivians and Lucids and Neos of the world struggle, right, with weaker demand, big capital expenditures, and not the demand necessarily to support it. The future still looks pretty uncertain for Tesla, and the stock is not exactly cheap, right?
No, there's always, to me, there's the separation of what Tesla the business is and what Tesla the stock is. And it feels like there's a very large
Yeah, I think it's inarguable that Tesla is a great business, not necessarily a great investment right now.
Yeah, there's a lot of other tangential moonshots that are priced into Tesla's stock that you and I have been like, we don't really know how to value these relatively well, but we can put a value on automaking. And right now, Tesla trades for 14 times book value and 226 times free cash flow, which I get it. It's growing. Those things are supposed to come down as free cash flow grows, as its book value grows. That's a theory, but it's really hard as somebody who is a little bit more value oriented can look at those and say, that's a premium worth paying. But that doesn't mean that there aren't stocks out there today that have done well in 2023, that businesses still look good and are still trading for very cheap. And I think that's where you and I want to go today, because we're always looking for stuff. We tend to dig into other places in the market, and sometimes we can find some good stuff.
Yeah, that's absolutely true. And to crib David Gardner, one of the co-founders of The Motley Fool, loves to average up and winners keep winning. And we're going to talk about companies that have been pretty good winners. Their businesses have grown, their profits have grown over time. And as much as their stocks are up a lot, we still like them. I'm going to let you kick it off, Tyler, and you're going to talk about Meritage Homes, the home builder, MTH. I'm looking over here to see at this right now, and we're still in early December, the stock's up about 63% since the beginning of the year. That's not too bad. What is Meritage? What do they do? Why do you like them right now?
I feel like I'm stealing your role because you're always the one who wants to crib Meritage Homes, but I'll do my best to take a stab at it.
I pounded the table on this stock for the better part of a decade, still own it, and just like you, I still absolutely love it.
Meritage Homes is a home builder, one of the companies in the home building industry that has pushed more towards the entry level, lower cost. We're going to do a little bit more cookie cutter. We're going to build, we're going to be good at selling, and just be a good operator. And that's what Meritage has done for the better part of a decade. And when it comes to home builders, there's not a whole lot you can really evaluate in terms of strategy. The things that you look at is, do they keep a tight balance sheet? Are they good at selling? And is the stock cheap? And those are the more or less the things you want to look at for a home build. Meritage Homes has been one of the better operators in that sense. Absorption rates, which means how many houses per community they build per month are sold, have been industry average, slightly better than average. They have been one of the better ones in terms of managing their debt and not getting out being too ambitious with their growth plans in terms of how much land is on their books or anything like that. And then going to the valuation point. And this is what kind of tipped the scales to me looking at Meritage Homes lately, is right now it trades for about 1.2 times book value and 5.6 times free cash flow. Now, cash flow is a little funky when it comes to home builders because of the way that things are accounted for on the balance sheet. But overall, with what we'll call I don't want to say perhaps rate cuts, but at least we're not going to see a huge jack up in interest rates and everyone's going to get scared and run away from the housing market probably in the next year or two. And that gives an opportunity for
people
sales
are
to
starting
start
to
accelerate.
adjust to the realities of the interest rate market, I think, is the big
Right.
thing.
And so you're starting to see a pickup in sales again, and it's much more of it is in new homes. So I think Meritage Homes is going to benefit from that and still trading for a pretty cheap valuation, even after a relatively large run up in 2023.
The stock has run up a ton, like you said. And the thing that I like to think about, and we've talked about it before on videos we've done, I do the say it with me, cyclical risk, secular tailwind. And that's certainly the case with housing. That's why home builder stocks tend to do trade for lower than average multiples, but these multiples are even cheaper than that with Meritage. A couple things that they've done. You talked about this focus on entry-level housing. This is something they started probably 6 or 7 years ago before other top 10 home builders were really looking there. They started that. They were a custom home builder, and the majority of their book was houses that they had a deposit on. A growing part of their book now are spec homes. They're building them without a deposit, and that's how it works when you're building entry-level housing. But you get better margins on them because custom homes, you have more expensive labor and you don't necessarily get the same kind of margin. So they've focused on that, and they've also expanded their use of land options versus just buying land over the past 10 years. It's one of the things they've done that's kind of helped the balance sheet. The bad side of that is when demand is highest and you're having to acquire land, you may pay a little bit higher premium if you're having to move more quickly to buy that land. But when the cycle turns bad, you don't have a bunch of land on your balance sheet that you might actually have to take a little bit of a loss on just to lighten up your balance sheet and pay down some debt. So they've done a really good job on the balance sheet and also skating where the puck is going to be, to crib a sports term there. And they've delivered wonderful returns as a result. I agree with you. I think Meritage Homes is a buy, even at these prices. And it's definitely on my list of stocks that I'm going to add to my existing holdings in 2024. Okay, Tyler, you ready to hear mine?
Yeah, let's go.
So I'm going to talk about TREX Company. We're going to stick with the housing theme, but I haven't actually talked about TREX in quite a while. And the reason why is that this is one that the stock has gone up a ton. It's up 71% so far this year. And it's honestly, it's been a little hard for me to figure out exactly why, because their business is down a ton because of higher interest rates, because they did so much business. I think they really pulled a lot of business forward during the pandemic and in kind of the early post-pandemic period, Tyler. But there was a period of time where people were spending a lot of money to make their house more what they wanted because they didn't have a lot of choice. So that was great for the business, and things have pulled back a little bit. Rising interest rates have made it more expensive for people to get a loan to build a new deck or to upgrade an existing deck. It's starting to normalize a little bit. And I think one of the things that's probably going to be a good factor for TREX, rising interest rates means that there are a lot of people that bought houses in recent years that, I don't want to say they're trapped in them, but it's going to be a lot harder for them to upgrade to a newer home because of the interest rate that they have. Less than 3% mortgage. You're looking at mortgages 7% now. That means a house is going to cost a lot more. So people are going to start doing more things like they were doing back during the pandemic and expanding and improving the house that they have. And I think that's a likely tailwind for TREX. And this is the leader in their product, the composite decking. It's green. It's 95% made from waste wood and waste plastic. Keeps those things out of the waste stream. They last 20 plus years under warranty. You don't have to restain it and reseal it every year. So you don't have to deal with the chemicals, the cost, and the time. So it is the leading brand, and they have the leading margins in that industry as well. Incredibly profitable, large market share. And I think even at these prices, even with the run up, it's still really interesting because as much as businesses come down, you think about a 3-year, 5-year mid-cycle valuation, it's a fair value. I just think it's a stock that you can be patient with. Honestly, I think I'm going to get a better price in 2024 than the price right now. And I'm willing to be patient and maybe wait and add to my existing position.